Assalamualaikum. Hi everyone. Okay, now I'm going to discuss about the common test question of November 2022, question 2. Alright, basically this question is on MFRS 140 investment property. Okay, this question consists of two parts. Okay, that is part A and B. Okay, for part A, the total marks are 5. Okay, while for part B, the total marks are 10. Alright, so the total marks for this question are 15 altogether. Okay, let's check out part A first. Okay, here it is given the information about a building. Okay, a 3-story building owned by this company, di Cemerlang Berhad. Okay. Alright, and it is also mentioned here, okay, that each floor of the building can be sold separately. Okay, so when the building can be sold separately, okay, when each floor, okay, of the building can be sold separately, that means we can classify, okay, each floor of the building separately. Alright. Okay, so let's check out what is required by the question. Okay, number 1, state the conditions of an owned investment property to be recognized as an asset. Okay, so to answer this question, okay, we have to relate. Okay, we have to relate our answer to the recognition criteria of an asset. Okay, so investment property can be recognized as an asset if it meets the recognition criteria of an asset, okay, which is number 1, okay, it is probable that the future economic benefit, okay, that are associated with the investment property will flow to the entity. And the second one, the cost of the investment property can be measured reliably, right? So that is the answer, okay, that you should give, right, for question 1. Okay, for question 2, okay, you are required to explain the classification of each floor of the building, right? Based on the relevant MFRS. Okay, we need to classify each floor of the building, right? Okay, so for floor number 1, okay, it is mentioned that the floor 1 is rented out to independent third parties under operating lease, right? So clearly, okay, floor number 1, okay, can be classified as investment property, okay, because it is rented out, okay, under operating leases, okay, not under finance leases, right? So if the property is rented out to the third party under operating leases, it can be classified as NIP, all right? And we can also see, okay, we can also read from the information given that the lessee actually uses the hotel, okay, uses the floor, uses the floor as a hotel, all right, that provides significant services, provide a range of services commonly provided by boutique hotels. However, di Cemerlang Berhad, the owner of the building, does not provide any services to hotel guests and the lessee. All right, so in this situation, okay, it's not the owner itself, the owner, which is di Cemerlang Berhad, that operates a hotel at this floor. Right? It is the lessee. The lessee is the one that operates a hotel, okay, at this floor. Okay, therefore, okay, the building can still be classified as an IP. Okay, because it's not the owner itself that provides or that runs a hotel operation, okay, at the floor. It is the lessee, right? So di Cemerlang Berhad, or the owner, just rented out. It just rented out the floor to the third party, okay, under operating lease, but the lessee is the one that operates a hotel. So the owner has nothing to do with the hotel operation. Okay, so in that particular case, right, even though the floor is used as a hotel that provide significant services, but since the owner is not involved in running the hotel operation. Okay, so the property, the floor 1, okay, can still be classified as an IP. Okay, so now let's check out for floor number 2. Okay, floor number 2 is occupied by the owner itself, di Cemerlang Berhad, okay, and maintenance staff, right? Okay, so since the floor is occupied by the owner, okay, of the building, as well as its employees or staffs, right? So this building should not be classified. This floor should not be classified as NIP but as PPE. Okay, so for floor number 2, it should be classified as PPE, yeah, instead of IP. Okay, for floor number 3, okay, it is vacant. Okay, di Cemerlang Berhad is still uncertain as to the usage of the vacant floor. Okay, so since the owner, okay, of this building, okay, is still uncertain what to do. Okay, is still uncertain what to do with this floor. Okay, so this floor is can still be classified as an IP. It can be classified as an IP since, okay, the floor is held for undetermined future use. Okay, so if the floor is held by the owner for undetermined future use, it can be classified as an IP. Okay, so that is the answer for question number 2. Alright, okay, so now let's proceed with part B. Okay, so part B, okay, let's read the question first. Okay, PSV Berhad acquired a building for 17 million on 1st June 2020. The legal cost to transfer title and property transfer tax, okay, incurred by the company were, okay, 600,000, okay, and 1,100,000 respectively. The company uses one of the 15 floors to accommodate its administration and maintenance staff. Okay, the other 14 floors are rented to independent third parties under operating lease. Right? Each of the floor cannot be sold separately. Okay. And the building is appraised at the end of each year, and the fair value of the building as at 31st December 2020 and 31st December 2021 were 18,300,000 and 20 million respectively. Right? The economic life of the building is estimated at 20 years. PSV Berhad has adopted fair value model to measure its subsequent measurement for its investment property and revaluation model, okay, for its PPE, right? And the financial year end is on 31st December each year. Okay, so from this information, okay, we can extract, okay, into the following diagram. Okay, we can draw this diagram, okay, from the information that we have read just now. Okay, so it is mentioned that, okay, the building was acquired on 1st June 2020, okay, and the initial cost, okay, the total initial cost is 18.7 million. Okay, so how do we get this 18.7 million? Okay, if we refer to this question, okay, the price of the building is 17 million. Okay, in addition, the company also incurred, okay, the legal costs amounted to 600,000 plus property transfer tax 1.1 million, right? So all these costs can be included in the initial costs, okay, of the investment property. Okay, that's why I wrote, okay, apa ni, madam dah tulis siap-siap kat sini ya. The initial cost for the building, okay, I write the total cost, the total initial cost 18.7 million, okay, which includes the price of the building, the legal cost plus the property transfer tax, okay. So the total initial cost is 18.7 million. And other than that, okay, the question also gives, okay, the fair value of the property, okay, on 31st December 2020 at the end of the year, okay, amounted to 18.3 million. Okay, dekat sini we know that, okay, there is a decrease, okay, in the fair value, right? Okay, there's a decrease in fair value amounted to 0.4 million or 400,000. Okay, so ada penurunan kat sini dalam fair value sebanyak 400,000. Okay, we just compare the fair value on 31st December 2020 dengan dia punya initial cost, kan? So kita tengok ada decrease lah in fair value sebanyak 400,000. And then it is also given, okay, the fair value on 31st December 2021. Okay, so the fair value on 31st December 2021, okay, is 20 million. Alright, so if we compare, okay, this fair value, okay, on end of at the end of year 2021, okay, with the previous fair value, okay, we know that there is an increase in fair value. There is an increase amounted to 1.7 million. So ada peningkatan pula dalam fair value sebanyak 1.7 million di sini. Okay. Therefore, kita tengok what is actually required by the question. Okay. Nombor 1, dia kata discuss the accounting treatment of the building for year ended 31st December 2020 and 2021 under MFRS 140 investment property. Okay, so we have to discuss accounting treatment for 2 years, which is for year ended 31st December 2020, okay, and year ended 2021. Alright, okay. And the total marks are 5, okay, for this question. Okay, so from this diagram, we know that for year ended 31st December 2020, there is a decrease in fair value amounted to 0.4 million. Okay, so that means there is a fair value loss. Okay, fair value loss for year ended 31st December 2020, right? And for year ended 31st December 2021, okay, the fair value has increased by 1.7 million. That means there is a fair value gain, okay, for year ended 31st December 2021. Okay, so how are we going to explain the accounting treatment for this investment property? Okay, so another important thing that we need to consider is that, okay, this property actually has dual uses. It has dual uses, as mentioned here. Okay, apa ni? Salah satu, one of the floors, okay, was used by the company. Okay, was accommodated. It is accommodated by the administration and maintenance staffs. Okay, alright. So that means salah satu daripada 15 tingkat bangunan ni, okay, is employee occupied. Okay, employee ataupun owner occupied lah. Okay, while the remaining 14 floors, okay, are rented out under operating lease. Okay, so bangunan ni dia ada dua kegunaan lah, kan? Satu tingkat daripada 15 digunakan untuk kegunaan apa ni? Untuk kegunaan administration dan juga maintenance staff of the company. Manakala selebihnya 14 tingkat lagi digunakan untuk sewa, under operating lease. Alright, and setiap tingkat cannot be sold separately. Okay, so if each of the floor cannot be sold separately, okay, we need to identify whether the portion that is occupied by owner and employee of the company is significant or not. Okay, so in this situation, there is only one out of 15 floors that is occupied by owner or employee. So 1 over 15 floors, okay, that means cuma berapa persen? Cuma dalam 7%, 7% saja, okay, daripada keseluruhan bangunan tu was occupied by owner and employee of the building, kan? So hanya 7% saja. Okay, satu daripada 15 tingkat, okay. So tak sampai 7%, okay. The floor was occupied by owner and employee, okay. So kita boleh katakan yang the portion that is occupied by owner and employee is not significant, okay. Therefore, the whole building shall be classified as investment property, okay. And then lepas tu kita kena explain pula berkenaan dengan subsequent measurement. Okay, subsequent measurement seperti mana yang Madam lukis dekat sini lah, ya. As I discussed just now, untuk year ended 2020, okay, there is a fair value loss, okay, because there is a decrease in fair value, while at the end of for year ended December 2021, right, there is a fair value gain, yeah, because there is a decrease in fair value, okay. And since this company, okay, adopts fair value model for subsequent measurement of its investment property, right, so the property shall not be depreciated over its economic useful life. It shall not be depreciated. Okay, so how are we going to answer this question about the accounting treatment? So this is the suggested answer. Okay, you can answer like this, or you can use your own explanation. Alright, okay. So let's check out the answer. Okay, for the accounting treatment here. Okay, on 1st June 2020, the whole building shall be classified as IP under MFRS 140 because, okay, as I mentioned just now, okay, the number of floor for rented out is more significant, okay, which is 14/15. Yeah. Let me use the pen here, the red color pen. Okay. The number of floor that was rented out is more significant, which is 14/15 floors compared to the owner occupied only 1/15 floors. Okay, so as I mentioned just now, the portion that is occupied by owner is insignificant. Yeah, it is less than 7%, less than 10% of the floors, okay, are occupied by the owner or employee of the building. Okay, so since the building cannot be sold separately, okay, the whole building shall be classified as an IP. Alright, and then you can also explain about the initial measurement of the building. Right, so you can say the asset is initially measured at its cost of 18.7 million. Okay, so you can also show the workings for the initial cost here. Okay, alright, and on 31st December 2020, okay, the difference of 400,000, okay, you can show the workings, okay, in bracket, okay, is recognized as a fair value loss in the SOPOL. Alright, and the investment property should be recognized as recognized at its fair value of 18.3 million, yeah, as at 31st December 2020 in the SOPI. Right? Okay, so the investment property should be measured at its fair value lah. Okay, at 31st December 2020 in the SOPI. Okay, and on 31st December 2021, okay, the difference of 1.7 million, okay, which is 20 million minus 18.3 million, okay, is recognized as a fair value gain in the SOPOL. Okay, why is it recognized as a fair value gain? Because there is an increase. There is an increase in fair value amounted to 1.7 million. Okay, so the investment property should be recognized at its fair value of 20 million. Okay, as at 31st December 2021 in the SOPI. Alright, so in the SOPI, the investment property should be measured at its fair value as at 31st December 2021. Okay, this is how you explain the accounting treatment, okay, for for the investment property. Okay, for the property with dual uses, whereby the floors ataupun each floor of the building, okay, cannot be sold separately. Right? Okay, so let's check out for another requirement of this question. Okay, so there is another requirement, okay, for this question. Okay, prepare the statement of profit or loss and other comprehensive income, okay, for year ended 31st December 2021 and 2020 and 2021, and the statement of financial position extract as at that date. So we are also required to prepare the SOPO and SOPI extract, okay, for year ended 31st December 2020 and 2021. Alright, so as we know, okay, just now for year ended 2020, okay, we've got a fair value loss, okay, amounted to 400,000. Okay, so it will be disclosed, okay, under other expenses in the SOPO. Alright, okay, and for year ended 31st December 2021, okay, we've got a fair value gain amounted to 1.7 million here. So we can show the fair value gain under other income in the SOPO. Alright, okay, and in the SOPI we have to disclose, okay, we have to disclose the investment property at its fair value, okay, as at 31st December 2020 as well as at 31st December 2021. Alright, so we can prepare the extract for the financial statements like this. Okay, you can prepare 2 columns for 21 and for year 2020 and 2021 like this. Okay, so for 2020 we've got a fair value loss, okay, on investment property amounted to 400,000, and for year ended 2021 we've got a fair value gain on investment property amounted to 1.7 million. Okay, and for SOPI, okay, you can also prepare 2 columns for 2020 and 2021. Okay, so you have to disclose the investment property under non-current assets. Okay, so you have to disclose the property, okay, at its fair value, okay, at 31st December 2020, okay, which is 18.3 million, and at 31st December 2021 the fair value of the investment property is 20 million. Alright, so that's all about question 2 of common test November 2022. Okay, alright, so thank you so much everyone. Assalamualaikum.